Central bank action and unprecedented monetary stimulus continues to sway money markets, but how will things shape up in the mid to longer term? Joining me down the line to discuss his currency forecast is Edgar Walk. Edgar, the dollar strengthened against the yen on Thursday despite Federal Reserve Chair nominee Janet Yellen's somewhat dovish testimony before Congress, as Japan's finance minister said currency interventions remain a necessary tool to stabilise markets. So whose plan is going to be more successful here? And subsequently, what is your outlook for this pair? Is the 100 mark here to stay?
I think at the end of the day, the Japanese will be more successful in weakening the currency than the Americans. And it has to do with the actions of the Bank of Japan, because currently the Bank of Japan is buying around 7 trillion yen in government bonds every month. But the government issues only 4 trillion yen in government bonds. So all in all, the Bank of Japan has to buy around 3 trillion in the secondary market, which means that the supply of government bonds is reduced and savers or investors have to look for other assets to invest. We have seen some flows into the stock market in Japan, not much yet into foreign markets, but in my opinion this will change in the next few months so that there will be more money flowing out of Japan into other markets, Europe, United States. And at the end of the day, this will weaken the yen so that we will see maybe 110, 120 over the next 12 months.
The euro, still reeling from an ECB rate cut amid fears inflation rates are waning, narrowed its losses against the greenback after Yellen's statements. Mario Draghi has said the central bank is not targeting the single currency. However, policy is obviously taking its toll at the moment. But will Fed effect outweigh any ECB interaction? What do you think the main driver will be?
I also think for the euro area, it seems that the current level of the euro against the US dollar is too high because the upswing is still fragile. We still have a lot of economic weakness in Europe. And so in public, the ECB will never admit that they're looking at the currency. But I think in private, they're discussing it. And I think they also see a clear need to contain any upward movement in the euro going forward. And given also the low inflation in the euro area, so I would expect to see another easing of monetary policy in the euro area, and I think it's very likely that the ECB will cut the deposit rate. Maybe not in December, but maybe in the first quarter 2014, and this should, to some extent, also weaken the euro against the US dollar. We have seen this earlier this year when there were already some discussions about the deposit rate, that it has the discussion had a huge influence on the euro-dollar exchange rate and intended to weaken the euro. So I think the ECB will take a clue from this experience and they will cut the deposit rate going forward. So all in all, it seems that the dollar has a lot of good reasons to appreciate against both currencies, the euro and the Japanese yen, going forward.
The euro-pound has been notably weak for a while now, and the overhead pressure seems to be unrelenting as we head into the weekend. But looking at the longer term, what is your forecast?
British pound is very interesting because when we look at currency forecasting, a Taylor rule approach has been quite successful over the longer term. So when I look at the Taylor rule, I would argue that the UK economy is growing strongly again. Inflation is relatively high compared with other countries. So all in all, it would argue that probably the Bank of England should be the first central bank to hike interest rates compared with the other central banks. But it seems, so all in all, it would argue for a stronger British pound going forward. But it seems when I look at the inflation report from this week that the Bank of England is not ready to go this way. And it seems that they want to avoid to be the first central bank to hike or the first central bank where the discussion starts about tightening monetary policy or hiking the interest rate. So it's seems over the longer term that probably the pound will appreciate, but there is considerable risk that markets will lose confidence in the Bank of England because it could appear that the Bank of England is behind the curve, and this could lead to a sharp weakening of the British pound because a loss of confidence has usually very strong effects on currencies. So it's a mixture. I would say base case is a moderate appreciation, but there's a clearly very high risk that the British pound could fall substantially in the future if there's a loss of confidence in the Bank of England. So it depends a lot how the Bank of England will communicate in the future and how they will act given the economic environment in Great Britain.
Edgar, thank you. Well, that's all for today's Targets in Focus. My colleague Ben Jones will be back on Monday with the next instalment, but in the meantime, have a great weekend.